Hey, what's going on, guys? Welcome to another video. And today I just want to talk about how volatile the market is going to be this year, and how to prepare and how to maximize your returns and make sure that you still have a great year this year, regardless of how bad of a year I think it's going to be. And so let's just go ahead and get right into it. So I've said this in previous videos, but because the Fed is raising interest rates, the market's not going to be anywhere near as good as it was last year. Last year, the S&P 500 had a return of 27%. I can tell you right now that is not going to happen this year. Last year, you saw these crazy things like all these meme stocks, DWAC and AMC and GameStop and Lemonade Insurance, and just all these crazy hype movements. You know, you're probably not going to see that this year either. This is still going to be a good year for stocks, but it's not going to be as great of a year as last year was. You know, I think it'll be a good year, but I also think it will be a very volatile year. And a lot of people don't understand what that means. That doesn't necessarily mean that it's going to be a down year or a bad year, even though we are in a bear market right now. It doesn't mean that we're going to have that. What a volatile year means is you're going to see a lot of crazy swings. You're going to see a lot of up and down and up and down. And the market this year is going to test your emotions. And so let me just show you guys a little bit of what I'm talking about. So we're looking here at the 1 year chart for the S&P 500. So if you look at the year of 2021, you can see that the S&P 500 just really did its thing. It just went up, just kind of skyrocketed. But let me show you guys something that I think is very interesting. Let's look at the month of September, where it had a nice little pullback. So if you look here at the month of September, you see it just pull back real nicely, real nice. Went all the way down here, and then it shot up back up again and went on to do okay. But now if you scroll all the way to January, which was one of the worst months for the S&P in a long time, you could kind of see what happens. It went all the way down here. You see what I'm saying? It didn't look too good, you know? And so I show you guys this because what you're seeing right here and right over here on this chart is what I think the entire year is going to look like. That's honestly what I think. I think it's going to be swings just like this. It's going to be up, then down, then up, then down. You know, it's going to be a lot of volatility. And so I just wanted to go ahead and give some advice on how you can still do well in a market like this, because unfortunately, there's a lot of crazy people on YouTube that keep telling you to buy these crappy, horrible, unprofitable stocks that are continuing to go down, and they just keep doubling down and telling you guys just keep buying and buying and buying. But I'm going to show you guys how to actually do well, so you can actually either beat the market or at least perform with the market this year. I mean, good Lord, you know, the goal this year is to not lose money, because I'm telling you, this is going to be a very volatile year. It really is. It's going to be a lot of crazy swings. So here's what I would say on how to prepare. This year, not only would I dollar cost average when you're buying, I would buy in very small increments. So the best example I could give you is, let's say you've got $1,000 that you want to invest, right? The worst thing you could do is put that entire $1,000 into one stock. You know, the worst thing you could do is YOLO and put that entire $1,000 into one stock that you just really believe in, Tesla or Nvidia or Starbucks, or even some hype stock or something that some YouTuber is pumping. You know, the best thing that you can do if you got $1,000 is split that $1,000 into $50 increments, and you pick how often you want to invest. It could either be a week, it could be every 2 weeks, it could be every month, whatever you want to do. And I would just slowly invest $50 at a time out of that $1,000 that you got into stocks. That's the way that you invest. Now, in terms of where to put that $50 each time you invest, I would simply split it up. You start from the very top, index funds, VTI or VOO or VGT, something like that. That's where, you know, 50% of that money should go. Then you start to work your way down, and maybe you could put some of that money in one of the really good companies like Tesla or Apple or Microsoft, and then you can kind of work your way down there. And then if you have some small cap stock that you really like for example, let's say you're a big fan of SoFi, then maybe you could put a tiny bit of money into there. Maybe something like that could work. But That's the way that I would invest this year. I would invest in very small increments over time, and I would dollar cost average, and I would only buy things like index funds or really good profitable companies, because I'm telling you right now, this is going to be a very bad year for growth stocks, and it is going to be very, very volatile, and the market is going to trick a lot of people. There's going to be some crazy violent green days, and there's also going to be some crazy violent red days, and a lot of people are not going to be able to handle those crazy violent red days. As a matter of fact, we had a lot of new investors who got into the market in 2020 and 2021. I think 2022 is going to be the year that wipes people out. I think 2022 is going to be the year that gets rid of some of these investors. I really do. I think a lot of these new investors are going to be like, okay, I'm done with the stock market. This place sucks. It's a scam. I hate it. It's gambling. I really do. I think 2022 is going to be that year. It's going to kick people out the market. They're going to get tired of it. They're not going to be able to handle that. And I'm trying to show you guys now, because I'm telling you, a lot of people are going to lose money this year. So many people are going to lose money in stocks this year. And I just want to make sure that doesn't happen to you guys. So let's just go ahead and look at the NASDAQ. I bet you, yep, the NASDAQ is pretty much the same thing. I mean, you see here, the NASDAQ had more pullbacks than the S&P 500 in 2021, but it still did good. As you can see, we had a pretty good one right here in March. Then you scroll over, you can just look at the chart and see, had a pretty decent April, but then you go down and scroll down, you can see right here in May. I remember May was bad. I remember May because May is when Tesla went to $500 and I loaded the boat. I couldn't help it. Tesla was too cheap. But yeah, so May, nice little pullback. Then the market did really well. The NASDAQ did really, really good from then. And then we go back to September, which is where you saw the S&P 500 have that little pullback as well. You see that the NASDAQ had the same thing. And now here we are over here in January 2022. And now it's starting to go up. And yeah, here's what I'm worried about. I'm worried that the market, let me scroll over so you guys can see what I'm talking about. I'm worried that the market is going to do this. It's going to go here and then here, and then it's going to go like here. You see what I'm saying? Like, it's going to keep going down. Like, it's not going to go back up here. You see what I'm saying? I don't think it's going to go back up here for a while. That's what I'm worried about. We're going to kind of start to see higher lows, lower highs, things like that. Like that's what I think is coming for this. And I think it's going to be a very, very volatile year. And I just want to make sure that a lot of you guys do not get caught up, because unfortunately you're still going to have these crazy YouTube pumpers who don't know anything about stocks that are going to tell you guys to buy these crappy, horrible, trashy, unprofitable companies that aren't going to do anything for you. No, keep in mind, I do talk about two companies that are very unprofitable on my channel. I talk about DraftKings all the time, and I talk about Arrival all the time, but I've made it clear so many times, so let me just make it clear again. Both of those stocks make up less than 5% of my portfolio, because at the end of the day, as much as I love those two companies, they are still very risky. They are unprofitable, and right now they are considered speculative. And it's very important that you guys understand that. The bulk of my portfolio is Tesla, Apple, AMD, Microsoft, and index funds. That's the bulk of my portfolio. A big part of trading stocks is managing your risk. You have to make sure that you manage your risk. So even though I talk about DraftKings and Arrival all the time, my risk is managed because those stocks only make up less than 5% of my portfolio. So I just want to make sure you guys understand that, because I'm telling you right now, the year just started and it's already come out to a bad start. But I'm telling you, this is going to be a very volatile year. It'll still be a good year, but it's going to be a very volatile year. And you could see some of these unprofitable companies and growth stocks go to some insane prices that you never thought you'd see. And I can tell you right now, as bad as things look right now, I think we have more to go. I think some of these companies are going to go even lower. I really do. I think the selling is not over. I think it's going to continue. God knows how many Fed rate hikes we're going to see. I mean, I think the market's pricing in 4, but we could have 6 for all we know. I mean, who knows? So I just really want you guys to be safe. And, the main thing that I want you to take away from this video is, please do not put all your money into the stock market all at once. Because I'm telling you, you saw what happened with Spotify and Facebook and everything today after hours. They all tanked 20%. Imagine you putting all your money into these stocks and then they take 20 and then they tank 20%. And you don't even have money on the side to buy the dip. But had you followed what I said and you did that $50 every week or every 2 weeks, now you've got money to buy buy the dip because you're following the plan of just putting a tiny amount of money in every week. That's the way you invest in this kind of market. That's how you do it in the bear market, because I'm telling you, things can just keep going lower and lower and lower, and that's probably what's going to happen. Forget the indexes. If the indexes are down 10, 15, 20%, then what do you think is going to happen to individual stocks? And so, yeah, it's just very important that you guys understand that. And so I think that's it. I think that's all I needed to say. So, yeah. That'll go ahead and conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe, and I will see you in the next one.